Let me now go to the second aspect, which is for the sale of a business. When we are talking of for the sale of a business, the first thing to do is the due diligence, just like the other one. In due diligence, as a seller now, you have to provide detailed financial information, detailed contract and record to the buyer during the due diligence process. That is, any material fact has to be duly disclosed and nothing should be hid. The second one is the asset valuation. The asset valuation in this instance is there is a need to determine the fair market value of the assets and liabilities that is being sold. In the previous point, I talked about the meaning of fair market value. The fair market value is just the price at which the buyer and the seller are willing to let go of an asset. The third one is the goodwill. When we are talking of goodwill, there is a need to calculate any gain or loss on the sale by comparing the sale proceed to the carrying amount of the assets sold. Any residual amount is typically recognized as a loss. It's also typically recognized as a gain. The fourth one is the continuity of business. Of course, this is important. You can't just acquire a business without knowing when the business will continue to expand or if it will continue to flow. In continuity of business, there is a need to consider the continuity of the business during the transition phase, and there is a need to also account for any ongoing obligations such as warranties or support services. Another one is the income tax impact. This is important because we have to assess the tax implications of the sale, including capital gain tax, and to work with the tax professionals in order to minimize any kind of tax liabilities that is ready to be a burden. Another one is the financial statement. When we are talking of financial statements, the financial statement, there is a need to prepare final financial statement for the business, including income statements and balance sheet. And this, it is done to reflect the sale and the impact on equity. Another one is the distribution of sale proceed. What we mean by distribution of sale proceed is that it is crucial to determine how the sale proceed will be distributed among shareholders, among creditors, and other stakeholders. Another point is the legal and regulatory compliance. There is a need to ensure compliance with all legal and regulatory requirements that is related to the sale, that is related to including filings with government agencies and notification to employees and creditors. Another one is the closing entries. Of course, in closing entries, there is a need to make a closing entries to accounts for the cessation of business operations and the distribution of assets and liabilities to appropriate parties. So, in general now, it is essential to work closely with accountants. It's also crucial to work with tax professionals, as I said earlier, and legal advisors when comparing accounts for the purchase of a business and the sale of a business in order to ensure accuracy, in order to ensure compliance, and in order to have the optimal financial outcomes for both the buyers and the seller. And a specific accounting treatment in this instance, it can vary based on the nature of the transaction and applicable accounting standard. And to this, we've come to the end of the lecture. Thank you guys for watching. Remember to subscribe to LearnCity if this is your first time of watching.